So hello and good morning. I'll welcome you to the morning meeting today on Wednesday, the 2nd of May 2018. This is Jens Klatt speaking, exclusively presenting this format to you here for JFD Brokers as their global head of research and education. And right now I have to check something. 1 second, please. Let me just see. Global head of research and education. And right now I have to check something. 1 second, please. Okay, that sounds good. So sound seems to be good, and there's no echo or something. There was some troubles in the morning for whatever reason, I don't know. But now the problem seems fixed. And if you face any issues here in terms of audio or something, please let me know in the chat box so that I can double check here at my end. But so far, yeah, it seems to be good. It seems to be fine. Let me just see here whether. Yeah, everything seems to be fine. Let's now have a look here at the DAX and the developments here. I have to say that's a crazy move right now. I mean, from a technical perspective, we can easily spot the reason for this big green candle here pushing now for 12,800 points. I think it's quite obvious that it's not just the yellow line, which is the 200 simple moving average here, but also the fact that this is the high of the week before, the former April high, but also the high of last week here, around 12,640 to 650 points on the upside, which is thanks to the break here on the upside, which is potentially triggering bullish action. And by the way, we are not only talking about bullish action, which was triggered, but have a look at this. I mean, we are right from the start of the trading day. We are bid. It seems as if there's no offers. it's just like the market is pushing higher, and so far chances are high that we'll stabilize at this elevated level into the evening here when the Fed will publish their statement. In fact, I don't think that there will be big surprises. I think the Fed will just deliver the same statement as in the month of March, and there won't be a rate hike or something. The question is, in fact, how markets interpret the lines from the Fed, and I think based on that, chances are given at least that there is a potential lose-lose situation for the DAX, because one main driver which initiated this push higher is not only or shouldn't be only seen here from a market technique perspective, market structure perspective, but it's also that the euro, thanks to its drop, as expected already last week here, thanks to its drop down to 120, is a potential driver for this current push in the DAX here. That's definitely something which we should take into account here. This is yeah, one aspect which is driving the DAX currently higher. And the thing is that now question arises, okay, what will happen in case of the Fed coming out tonight in their statement, coming out as expected, but market participants interpret the words from the Fed as dovish. What should be expected in this context? I think it's obvious that if the Fed is considered or if there's something between the lines which is interpreted in a dovish way, chances are high that the US dollar will give some of its gains over the last weeks, which it has built here. And currently, we're in fact pushing towards and above 92. Remember, I said that this is a potential target on the upside, which we should go for if we make it back above. Back here, 90 was after the breakout of this downward channel, which we made a topic already several times in the past. And so yeah. With this current push higher here, it's expected, if the Fed is interpreted in a dovish way, that then here the US dollar will give back some of its gains, and that the Euro USD will probably see a retracement. Not sure whether we'll really make it back towards 122 here, but chances are definitely given that this could happen, let's say. So if the euro strengthens then, and we find one current main driver in the DAX here, in the euro, which is weakening, so the driver on the upside in the DAX then, well, that means on the other hand, if the US dollar, Euro USD here makes back some of these losses over the last trading days, well, that potentially could mean some headwinds for the DAX then. On the other hand, let's assume that the Fed comes out hawkish, or is interpreted in a hawkish way. Even though, again, it's in fact dovish or hawkish interpretation is in fact something which should be considered unlikely, because I think since there won't be big surprises or big changes in the statement of the Fed here itself, well, I think that the market will probably the markets will not react to the statement at all in general. But let's assume that this will happen, that they're interpreted in a hawkish way, or the statement is interpreted in a hawkish way. This could then mean that 10-year yields are pushed above 3% again, and also above the highs from 2014, and gain serious momentum here. We've seen last week on Tuesday and also on Wednesday what will happen if this is brought up, such a momentum is brought up here. Equities sold off. It was mainly initiated from the US equity markets, so that was the candle here from last week on Tuesday. And we lost something like 200 it's not enough, 700 points or something, 600, 700 points, and it swept over to the DAX here, which has seen also some serious losses, which accelerated again then on Wednesday, the next day. So with this in mind, chances are high that probably the euro can stabilize at its current levels here. Probably it will significantly dip below 120 and close below that level. But, and this is the thing, if there is serious risk aversion forming based on yields spiking higher in the US, there's a good chance, a very good chance, that this will weigh or have a negative impact on US equities, and this will have a negative impact then on the German DAX in this case, or European equity markets, and also the DAX then. And if we combine this outlook here with what we've seen currently from a technical perspective, with the DAX going for 12,800 to 850 points, aiming for the lows of November, December 2017 and January 2018, this is something to really carefully watch here, this region. So don't get me wrong, I'm not saying I'm aggressively short against this region. That's definitely not the case, and I think we should be really careful of trading the DAX that way currently, especially looking at the intraday time frame and seeing the strong momentum. I mean, yes, we are at an elevated level, and yes, this looks extended, and yes, probably the risk reward is more and more unattractive, so a pullback becomes likely, and should be considered from a risk reward perspective. Nevertheless, be really careful with the outlook of the Fed in the evening. Don't expect too much volatility to happen then in the upcoming hours here. I mean, we've already seen a quite strong push on the upside. Nevertheless, the market, that doesn't necessarily mean that we get to see further volatility now on the downside and the market pulling back, but it could be that over the next hours the market will just, the DAX in this case, stabilize at an elevated level and wait for the Fed. Nevertheless, I carefully watch the current developments here, and I could imagine that here the region against 12,800, 850 points is not just a serious resistance zone in the market, but it's also a potential short trigger against which, if the Fed is interpreted in the way as described, could act as a fundamental driver and push the DAX aggressively lower from this current level. So it could be that the current move is exactly what I described already last week as a potential squeeze on the upside, which is then sold aggressively again if we reach 12,800, 850 points from here. And you should be definitely really careful. That's something I haven't explained or presented it in the English version here in a technical piece or something, but in my weekly piece for the DAX in German last week on Friday, that was exactly what I wrote down here. Potentially squeeze on the upside, and then probably seeing some stronger headwinds against 12,800 to 850 points. So that's the outlook for the DAX. So currently, if you're long, well, you feel really happy. If you are short for whatever reason, well, be really careful. Probably you got already stopped out, but don't I mean, yeah, sure, you surely, if you have a system running and the system says, well, now we are short again, well, you have to trade the system, respectively the signal. Nevertheless, I think based on the current developments here, it's not the worst idea to intervene from a discretionary perspective and probably at least reduce the position size here. Because currently the overall advantage should be clearly seen on the upside. I'd stay flat till tonight, till the Fed comes out, and then see whether I position myself into the Fed, respectively shortly after the Fed, or I'll start to position myself tomorrow. Not sure whether it will be the long or the short side, but currently I'd be really careful, a little careful, not really, but a little careful at least here for long engagement, since somehow it feels a little shaky what we get to see here. Let's have a look here at the Euro USD. Also very interesting. Again, it's not surprising to see this move. This was also something I mentioned already last week, based on the sentiment extreme we've seen in the commitment of traders report, over 150,000 contracts being net long, market participants, big speculators being net long, so it's just supply coming into the market here, which can't be absorbed and pushes euro lower here, and it wouldn't be such a big surprise if this continues in the upcoming days then, even though volatility could be a little elevated, let's say tonight with the Fed, then also with some data coming out here from the US. Tomorrow it will be ISM non-manufacturing. Today it's not only the Fed but also ADP at 12:15 p.m. GMT. We have the NFPs on Friday. So all in all, there's plenty of news out there, which in this case, if you're looking at the current price action in USD, if they disappoint, could act as kind of a trigger for at least a pullback then here in Euro USD on the upside. Nevertheless, currently I'd say on a 4-hour chart, I'd be short the Euro USD below 121.50. I consider the region around 2060 here, 2070 a potential short trigger, and targets on the downside can be found first at 119.30 and probably even below that. And why not going in a higher time frame? Why not going for 115? So there, I've read an analysis yesterday, a research piece, which mentioned from an investment bank, which mentioned 115 at the end of Q2 2018. I think if there's enough skepticism building here in euro, and this net long exposure is kept on reduced, then I think chances are high that Euro USD can definitely push lower. Not sure if it will be 115, but I think significantly below 120 is absolutely realistic here. The picture is slightly different in pound sterling USD, because I have to say, well, what we've seen here from here, those highs, yearly highs, April highs, let's give it a round number. Let's call it 144, even though it was 43.70 or so. So from these levels, there has been serious selling pressure, which accelerated based on several disappointments in the data which was published here, and also the comments from Mark Carney, who came out and said, well, guys, not sure, but there are several meetings this year, BOE meetings, at which we could decide about a rate hike. So that doesn't necessarily to be the one here in May. And that was a main driver lower for pound sterling against the US dollar, because market participants here in this region have priced in a chance of a rate hike by nearly 80%, and now it's below 20%. Now the thing is that I think it's probably a little too much. It's too aggressive what we've seen here in form of selling, and I mean, now we tested the region around the yearly opening of the pound sterling, and it's also potential long trigger. So what I mentioned in the German version of the morning meeting was that I said, well, I could imagine, even though it's very, very aggressive, but I could imagine here long engagements to be quite attractive. I have to go down in a time frame to a 50-minute time frame in this case, so we can clearly see that somehow the market has made it back above a potential relative high here, broken the structure of falling highs and falling lows, and pullbacks against 360.20 here. So 1.360 I'm sorry, 36.20. I'm sorry, 36.20 here, with a stop below 135.80 and a target here at 37.20. I'd go higher, in fact, but it's already giving us a risk reward of 2.1 to 1 here, which is already attractive. And I could imagine that, especially if the upcoming data is more attractive or coming out better than expected, even though yesterday, for example, PMI data disappointed, but somehow I have the feeling that pound sterling has some serious rebound potential, especially if the US dollar can hold this momentum here, which we have seen after the breakout of this channel here, this downward channel, and especially if the data now from the US disappoints, respectively the Fed here is somehow interpreted in a dovish way. Not sure whether that will really happen, but chances are given that pound sterling is probably about to see quite significant pullback, and probably this is right here. It's only the beginning of a sharper rise back, probably back towards 140, even though that's probably a little too optimistic. Nevertheless, if you go lower than that, like I already said, going longer than 36.20 with a stop at 35.80 here and aiming for 37.20, well, even then the risk reward is attractive enough, I think, and could already probably be used for a very aggressive anti-cyclical but nevertheless attractive long engagement in pound sterling here. Now let's have a final look here at dollar Japanese yen. So dollar yen broke out of this consolidation area, which we made a topic already last week, and has now is aiming for 110, probably 110.50. Thing is that currently I think the risk reward for long engagements now is getting unattractive, and I'd carefully watch. So currently I'm definitely not, as I'm not in the DAX, I'm not going for short engagements in dollar Japanese yen, but I'd definitely be a little careful here, and carefully watch the region around 110, probably 110.50 on the upside. Probably this is a region where a dollar Japanese yen could face some serious trouble, and probably see more aggressive selling coming into the market here, depending on the Fed, the interpretation of the Fed tonight, respectively the data coming out. But yesterday, for example, ISM manufacturing data came in below expectation. Not significantly, nevertheless, it was already a sign that probably the momentum here is weakening a little, and this could act as kind of a bearish trigger then in dollar Japanese yen, and based on which we get to see some serious pressure coming in. Nevertheless, it's first of all only a retest, which is then happening potentially of the region 107.50 to 108. And yeah, that's it from my end. So I wish you all the best. Happy trading. Watch your stops, and talk to you again tomorrow on Thursday, the 3rd of May 2018. Yeah, I wish you all the best. Happy trading. Watch your stops. Take care, and see you tomorrow. I look forward to it. Have a good day, and bye-bye.